Assalamu alaikum once again. The topic is IAS 36 impairment, and before starting the session, you people have done the documents are shared with you that you have already read it. Now it's my turn to explain all the aspect, including one topic, including one question of P2. That's the caliber of the SBR. So let's start the topic. IAS 36 impairment. What is this topic about? As you know that it's a topic of F7, or majority of the part you have already done in the F7, but it's also important with respect to the strategic business reporting exams. If start the session with the exam focus area, so with respect to exam marking aspects, majority times in P2 it's examined 6 to 8 marks. Majority time it's examined 6 to 8 marks. But one time it's examined with a scope of 25 marks as well. So we have to it's all about the P2 exams. With respect to the SBR exam, this particular accounting standard not yet examined, but not yet examined with the independent case, but the integration of the other accounting standards it's already examined. We will discuss the SBR exam aspects later, and we will discuss this accordingly. But independent scenario of 6 to 8 marks, no. Independent scenario of 25 marks, no, not here examined. So this is what the accounting aspects, this is what the exam aspects we have we have just covered. Now what is this topic about? What is this topic about? Impairment test is basically based on the conceptual framework that is prudence. That is prudence. And what is the reason or logic behind this accounting standard? If for example any individual non-current asset tangible, for example any individual non-current asset tangible, for example a machine or a building or a land, plant, whatever, if we are going to report that particular building in the balance sheet or the statement of financial position with a particular amount with the respective standard of, for example, IAS 16, if we are going to report any particular non-current asset tangible, that is machine or building, in the balance sheet, of course reporting to the balance sheet, it's basically a legal requirement, and publish of the accounts is the legal requirement, and ultimate this balance sheet or in all the financial statement is part of the information for user of the financial statement. But what if if we are going to present the any particular non-current asset tangible, that's machine or building, with the respective accounting standard, by this IAS 16. But on the other hand, before reporting this aspect, before reporting by this particular account asset with the respective accounting standard, there are some indications about the future economic benefit related to that non-current asset. There are some issues related to future economic benefit, because the definition, the very important part of this discussion, any non-current asset, it's basically asset. An asset is basically reflecting the future economic benefit. If we report any asset, for example, with the value of 1 million to the user of the financial statement, so one side we are the management of the company, but the opposite side, who are the user of the financial statement, is basically viewing the 1 million amount of the non-current asset as a future economic benefit, are reporting by $1 million reflecting to the user of the financial that this asset will generate the future economic benefit of the $1 million. So we should be very much concerned and we should be very much conscious that either this particular asset in reality or in expected provide the future economic benefit of the $1 million or not. But this aspect about the assessment of the future economic benefit, this aspect of assessment that either the future benefit of 1 million is expected or not, it's not the part of the IAS 16. But based on this prudence concept, one accounting standard, that is IAS 36, and that is impairment test. And this impairment test is basically the assessment of the future economic benefit of this particular asset, or even the cash generating unit as well. Yes, I know that you people are very well with respect to the calculation of the impairment test, but the expectation of the examiner based on this discussion, what I have doing since last 5 minutes, that's very much important. Number one, IAS 36 is basically based on prudence concept. How? Number two, how it's a prudence concept? IAS 16 or IAS 38, it's not discussing the aspect that either the reporting by IAS 16 or 38 gauging or assessing that the amount which are calculated is equal to the future economic benefit or lower than that. If it's lower than that, then there should be some losses that should be reported and the amount should be reduced, not according to the 16 and 38. That is what the core concept of IAS 36. That is what the core concept of IAS 36. So do remember this point, that IAS 36 is about the prudence concept. And this is not only the non-current asset belongs to the tangible, it is also about the intangible asset. Yes, this accounting standard limits the scope by saying that IAS 36 applies to impairment of all assets other than inventories, deferred tax assets, employee benefit assets, financial assets, investment property, and biological asset by IAS 41, and non-current asset held for sale. Because the impairment aspects of all impairment aspects of some other accounting standards have their own criteria. For example, IFRS 5 has own criteria of the impairment test. Financial assets, IFRS 9 has own criteria of the impairment test. Investment property, that's the only fair value model. Leave it, we will discuss later. Employee benefit asset, that the asset ceiling test has their own criteria for the impairment aspects, that the asset ceiling test. So before starting this topic of the impairment test, that's very much important that we should have to know that we are here to discuss about the concept of the prudence, and one of the prudence usage that's covered by the IAS 36. That's either the reporting of that particular amount calculated by IAS 16 and 38, is it equivalent to the future economic benefit? Yes or no? If there are some indicator about that the future economic benefit is question mark, either external indicator or internal indicator, then we have to reduce the amount. If impairment test qualify the impairment loss, then we have to reduce the amount and charge some losses as by name of impairment loss. Okay, one more important aspect, one more way that we can say that one moment. Yes, listen here. Listen here. Yes, listen carefully. Candidates, since the start of this live sessions, I have also told you, and last session, last week's session, I have already focused very important things that yes, we have to develop the knowledge of accounting standard. That is one thing, but parallel to this, we need to understand also the aspects of the conceptual framework. We also need to consider aspects of the ethics, and also with respect to the investor perspective. Also, we have to consider the aspects of the investor point of view. Now, one small discussion about the investor perspective. Listen here. For example, you are the investor of the company. If you are the financer or investor of the company, so in balance sheet, your amount somewhere here, either as a debt, non-current liability, or equity, that is share capital, share premium, retained earning, or other reserves. So either with respect to the debt or either with respect to the equity. If you wanted to justify your money, listen, if you wanted to justify your money, that's how, where is my finance in the company? Where is my finance? Because once if you inject your finance, company make an entry that is bank debit, and debt means liability credit, or bank debit and share capital credit. But your money definitely not in the bank. Instead, the company must have to invest this finance in somewhere in the asset. So your finance should be reflecting, should be reflected as a non-current asset. For example, in the case machine, for example, intangible asset as a software. So if you invest the money in my company, for example, and you are not part of the management of the company, but my responsibility is that I should have a transparent presentation in front of you, a transparent presentation in front of you, and I'm going to make a balance sheet to you. So that balance sheet should be transparent, clear, and without any mistake or in expectations. Because when you view the balance sheet as a user, not an accountant, as a user, how you perceive the balance sheet, you will perceive the balance sheet in this manner, that you are the financer, your money is here, and money should be justified with the non-current asset. Whatever the non-current asset, the user or investor having expectation that yes, Mr. Hussain, we have invested a money in your books and you have purchased a machine, and inshallah in future you will generate the returns, income statement returns. You will generate the returns from this non-current asset and provide to us as a return in the form of dividend, in the form of interest. So what is your expectation? Your expectation that these assets will provide the future economic benefit. Now come to the aspect of accountant. The accountant, the professional accountant should have a responsibility not just to calculate the amount by IAS 16 and 38. Not just to provide the information or calculation based on IAS 16 and 38. Instead, also realizing that if there are some external or internal indicator, with respect to that there are some question mark, there are some doubt that future economic benefit are not enough, then there should be some impairment test, and if it qualify for impairment loss, you have to put impairment loss and reduce the amount of asset and generate the loss. That is what the core concept behind the impairment IAS 36 accounting standard. Now, how to calculate the impairment? Now, yes, what is impairment test? And you have already studied from the handout and F7 as well, how to calculate the impairment test. If subject to some impairment indication, either internal and external, first of all, any reporting date, we have to calculate the carrying amount with their original standard. And with respect to the original policy of the company, either the cost or revaluation, and compare the carrying amount with the recoverable amount. And you can make a mindset with respect to recoverable amount. Recoverable amount means how much we can get the maximum benefit from the asset. Recoverable amount means how much we can get maximum benefit from asset. And the maximum benefit we can get from the asset, either number one, from sale, that is fair value less cost to sell, either from sell or number two from usage, that is value in use. That is value in use. So which one is higher? We will pick the amount. What is the maximum benefit? Maximum means which is one is higher, and then put the figure here. And if the expected future economic benefit is compromising, that means we will book the impairment loss if carrying amount is greater than recoverable amount. Means if the amount of reporting we are going to make is higher but the future economic benefit expecting is lower, that means the amount should be adjusted and equalized to the future economic benefit. Do remember that prudence is always about future expected losses. It's not about the future expected gain. If there are some indication that future economic benefit is higher, so don't recognize the gain. So that's why if carrying amount is greater than recoverable amount, don't do anything, because it's against the prudence if you do anything or exaggerate the amount. Number two, whenever you will calculate the value in use, that is the present value of future cash flow, and we will calculate the present value using discount rate. This is very much important, huh? Discounted, always pre-tax. It's mentioned on the notes, because tax matter is the market matter. It's always the pre-tax matter. It's a market matter. We can use the post-tax as well, but it's accounting standard recommend using the discount rate that is pre-tax, because gauging the expectation with this other than tax, normally we will generate the profit first, then imposing the tax. So assessing the future potential other than tax, that is PBIT. You can say that this is about the generation of future amount in terms of PBIT, not the profit after tax. So using the pre-tax discounted, that's important, and this part is already examined in in P2 exams. Okay, so I hope that you have done this exercise, and it's very simple. It's very, very simple. The tax issue is mentioned here. The discount rate should be pre-tax that reflects current market assessment of the time value of money and the risk specific of the asset for which future cash flow estimate had not been adjusted. And this exercise, I think so that you have already calculated, and this one is the exercise. Yes. An entity is a single manufacturing plant which has a carrying value of $749,000. New government elected in the country passes legislation significantly restricting export of the product produced by the plant. So this is the clear indication. As a result, and for foreseeable future, the entity's production will cut by 40%. Cash flow forecasts have been prepared derived from the most recent financial budget or forecast for the next 5 years, approved by the management, excluding effect of the general price inflations. So another 40% cash flow. Production will cut 40%. So another indication that's about the impairment. These are the future cash flows, and if the plant is sold, it would realize $550,000 net of selling costs, including disposal proceeds. Entity estimate that pre-tax discount rate, yes, pre-tax discount rate 15% after taking into account the general pricing inflations, and these are the discount factors here: 1, 2, 3, 4, 5. So the important point is that with respect to this question, first of all, impairment test. The carrying amount of the asset, that is $749,000. But we can compare the recoverable amount, and that is higher of fair value less cost to sell, and that is 5,50,000. Or value in use, and we need to work out here value in use, and these are the discount factor, and it's very simple to work out with this present value working. It's very simple. Discounting the cash was with this 15% and then work out with the present value. That is 230,000 into 0.86957. That is 200,000 almost. 211. $159,500 almost, huh? It's approximately. 103,000 approximately. I'm rounding off all the figures. That's not taking the 230. Rounding off 115,842, that's 116,000. 200,000 plus 159,500, 103,000, 59,000, 116,000. That is equal to 637,500. You can recheck the amount from the working. I hope the amount is same, 637,500, and the higher is 637,500. And we will work out that's impairment loss, that is 7,49,000 minus 637,500, 1,11,500. So with respect to this question, with respect to this question, with we will in balance sheet we report this particular plant with the value of 637,500, 637,500, and an income statement. We don't know right now the amount of depreciation, but the impairment loss, that is 111,500. And subsequently the plant will depreciate with the value of plant depreciation will be based on 637,500, not the cost base. And these things you have already done with your earlier studies, and it's very simple. Yes. Okay, now move on. Rest of the part, the most important thing that we must have to know that impairment, what are the reasons of the impairment? And impairment indicators may be the external one or the internal one. These are the impairment indicators, and this may be external or internal. These are the external indicator and internal indicators. So from where we can get the evidence. Do remember one thing, IAS 36 says that don't test the impairment until unless you get the evidence of the impairment. And this is the most important thing. This is the important thing. There should be some evidence of the impairment. This is the most important thing. Evidence of the impairment. So either the external indicator or internal. Until unless we get some evidence of impairment, objective evidence of the impairment. We will not allow to make any impairment test. Okay, like this. External significant decline in the market value of the asset below the expected due to normal passage of time or normal usage. Yes, it's indicated. Significant changes with an adverse effect of the entity in technological or economic environment. Means market deteriorated, some technological change, some economic change. Our product demands now become reduced. Market rate become market interest rate become increase, or the discount rate become increase. If discount rate become increase, so there is a chance that the present value future cash flows amount will be reduced. There's a chance that value in use amount will be reduced, and if the value of use amount will be reduced, it's an indication. It's an indication that um, impairment will arise. Same number 4, carrying amount of the net asset of the entity exceeds market capitalization. Means if the company's net assets exceeds the market capitalization, that means that book value of the balance sheet is higher, but in actual market value of the company is in lower side, and that is very much important aspect. For example, if you have a shop and you have invested in the shop for the renovation a big amount, but actual purchasing capacity of the consumers now become declining, so your balance sheet amount of asset is higher, but actual market worth will reduce. So your investment, it's possibility that your investment in future will not be covered, and that should be reported. Same as it is in the balance sheet, the asset worth is higher, but in the stock market the market capitalization is lower. It means the economic conditions in downturn and your balance sheet amount is not good enough to generate enough amount in the future to return to the shareholder. So your asset worth should be reduced and then report. And reduce indicator throw to the IAS 36 impairment test. So carrying amount of net assets of entity exceed the market capitalization. These are the external reasons. Internal, a lot of factors. Some internal accidents arises. For example, evidence of obsolescence or physical damage. Internal reason. Third one. Internal evidence available that asset performance will worse than expected due to any reason. Performance of asset is not up to the mark. Number 2, significant changes with adverse effect on the entity. The asset become idle. It's possibility. It's the usage of assets is not up to the mark. Plans to discontinue or restructure the operation to which the asset belongs. Plans to dispose of an asset before the previously expected date. Reassessing the asset's useful life as finite rather than indefinite. One thing is finite, define, and one thing is indefinite. If asset useful life is a stretching, it means the usage of the financial statement, it's compromising. It's not up to the mark. So these are the internal external reasons. So first develop the reasons for internal and external, and after that we will put some impairment test as we worked out before this reading or the question, that's is there any impairment loss or not. Once the asset meets the criteria to be classified as held for sale, it's excluded from the scope of 36 and accounted for under IFRS 5 of sale, non-current asset held for sale and discontinued operation. We will discuss later. And important thing is that candidates, the point number 4, that is annual impairment test, very important thing. Some of the intangibles having the infinite life, or the life is not defined, so we have to test them on annual basis. I said test them annual basis, not impair them annual basis. For example, a goodwill life is indefinite. For example, business club membership, it's other than goodwill. For example, brand, also it's a part of the goodwill. For example, it's other than goodwill. Indefinite life. If any of the assets has indefinite life, infinite life, so we don't want to weight them for some determining or getting some evidence for the impairment test. But on the other hand, we have to test them impairment on annual basis. So this is the point. Annual impairment test, irrespective whether there are indications of impairment, are required for intangible asset with indefinite useful life or not yet available for sale use, or the goodwill acquired in a business combination. So these are the aspects. So whatever we have done till now, we have done two things. Why the impairment test or impairment accounting standard developed, and number two, whatever the impairment aspects, that with respect to the individual asset. Now the next